Very good morning, friends. I hope I'm audible. Right, I guess we are good to start. Very good morning once again. So, I think just to remind you where we were, we started with the art of making journal entries, and I gave you the exposure in terms of the modern technique of doing entries. The three-step model which I gave you, that is in step one, we apply double entry bookkeeping. In step number two, you identify is that an asset, liability, income, expense. And then in the third step, I give you the inputs that expense is always a debit, income is always a credit, and I give you that assets, depending upon increase, decrease, gets a debit credit, and liability goes exactly the reverse. So today we're going to learn the art of making entries with a traditional technique as well. And I think it's important to understand the traditional technique as well. So we're doing an alternative way that is a traditional technique. Now, traditional technique is slightly, I would say, a little more slightly complicated as compared to the modern technique because modern technique is much, much easier. But as far as the traditional technique is concerned, it's slightly complicated. That's why I think the modern technique also got developed. So here again, I'm going to give you a three-step model. The step number one is exactly similar to what we have done in the modern technique, but there's going to be a little change in terms of the step number two as well as the step number three. Rather, I would say step one also remains the same. And you can say step number two is going to change, step three slightly change. So let me, I think, take same kind of entries which we did for the purpose of understanding the modern techniques. Let's have a look. So I'm just going to share the board to you. We're going to just first understand the three-step model, and then I'm going to also document that later. No worries, the notes would come later. So what I'm giving you is the traditional technique. What I'm giving you is the traditional technique. So we're looking at the traditional technique, and we're looking at the traditional technique in terms of making a journal. So here again, I'm going to give you a three-step model. Undoubtedly, I'm going to call this as KB's three-step model once again. So let's call this as KB's three-step model. So in this particular case, when I'm looking at the traditional technique, the step number one is exactly the same. We would apply double entry bookkeeping. I don't think so. I need to remind you that how you're going to apply the double entry bookkeeping. You need to visualize the two accounts in every transaction. To begin with, we started with that one is cash, the other is some asset, liability, income and expense. Then I also took you to the exposure of non-cash entry. We saw the concept of credit sales, credit purchase, etc. We looked at the concept of outstanding, accrued, advance, prepaid, all those things. I hope you, of course, recollect all that. So the first step exactly the same. Now in the second step, you need to identify the nature of the account. Now in the step number two, you need to identify the nature of the account. Now don't get worried as I'm about to tell you a few things. We will take good number of examples to conceptually understand the types of accounts as well. But just hear me, we'll understand that with good examples. The person who made the traditional technique decided that there are two types of accounts. One is called personal account. So he said there are two types of accounts. One is called a personal account and the other is called impersonal account. So there is a personal account and there is what we call impersonal account. Now, when you look at the impersonal account, in terms of the impersonal account, there are two types of accounts. One is called real and one is called nominal. So one is called real and one is called nominal. So we've got two nature of accounts. One is personal and one is impersonal. And the impersonal account is divided in terms of real as well as nominal accounts. Now, let me first explain what a personal, what a real, and what a nominal account is. Then I'll give you some tricks with the help of which you will be able to decide, is it real, is it nominal, or is it personal account. Number one, any account which relates to a person, whether it is a natural human being or it is an artificial human being. For example, when you consider a company is considered to be an artificial legal person. So any account which relates to a person, whether it is natural human being or artificial legal person, is a personal account. And if it does not deal with a person, it becomes impersonal. Next, when you say a real account is something which is either tangible or it is intangible in nature. So you can say generally assets are real in nature, and you can say anything which can be seen, tangible, anything which can be felt that is intangible is supposed to be a real account. For example, your machines, for example, your patents, your copyrights, your furniture, your buildings, they're all real accounts. All assets generally, whether they are tangible or intangible in nature, are going to become real accounts. And nominal account is the easiest, that all the incomes and all the expenses are nominal account. One thing is pretty clear. Any asset or liability is never, any asset or liability is never supposed to be a nominal account. Only incomes and only expenses a nominal account. So let me just connect the dots once again. So we said that you need to identify the nature of the accounts. If it relates to a person, whether it is natural human being or it is supposed to be artificial legal person, it could be individual, it could be group of person, that doesn't make a difference. That is personal account. What is important is it relates to a person. And if it doesn't relate to a person, then it is impersonal. Assets generally real accounts in nature, something which you can see, something which you can feel, tangible, intangible in nature. And all the income and expenses are supposed to be a nominal account. Now this can get tricky because identifying the personal or nominal account, people could make some kind of errors. To make the job simple so that you do not conduct any kind of errors, I have certain systems which I'm going to tell you now. But I hope you got the basic dots clear. I hope you're clear with the basic inputs, that when you go to look at the nature of the account, how would you identify it's personal, it is real, or is it nominal? Basic funda clear, then I can give you tricks on that. Okay, so far so good. I think I got just one yes on that. I think I need to share some tricks with you at this particular stage. Okay, we got some more yes. Okay, now please hear me carefully. Don't worry, I'll give you the notes later. Don't worry on the notes. But first, I think let's give you some inputs. Just hear me carefully. Maybe what I'm about to tell you is what you're listening for the first time, but trust me, it's going to make your life very simple indeed. Let's give you some funda. My advice is never decide that first it is personal or not. Don't get into the trouble of deciding it's a personal account. You need to consider number one, is it income or expense? If you say yes, it's an income and expense, undoubtedly nominal account. Undoubtedly nominal account. Now, hear me carefully. All income and expenses are nominal account, but, don't worry, I'll pen down the notes later, but hear me carefully. If I use the prefix or if I use the suffix, You understand prefix and suffix? I say, if you use a prefix or a suffix, you understand what is a prefix and a suffix, or do I need to explain that to you? Yes, great. So, if you use a prefix or a suffix, four words with the income and expense: outstanding, accrued, prepaid, advance. Don't worry, we'll pen down it later. If you look at the four words with income and expense: outstanding, accrued, prepaid, advance, it is supposed to be considered as a personal account. Why? When you say there is outstanding salary, it is due to a particular person. When you say there is an advance, it is given to a particular person. When you say it is accrued, it is yet to be received from a particular person. So when I use the word advance, prepaid, accrued, outstanding as a prefix or suffix to any income and expense, it becomes personal account because now it is due to a particular person, recoverable from a particular person. You got my point. So let's try this till the stage. I'm going to give you some names. You need to decide, is it X nominal? Because I'm just going to give you some items which are either nominal or personal. So I'm going to give you names and you're going to decide, is it nominal or is it personal? We're not getting into real accounts at the stage. Salary. And that's right, it is undoubtedly nominal account in nature. Great. Salary outstanding. I use the suffix real. When did I tell you that it is real in nature? So when you say that it is outstanding salary, now it is due to a particular person. It is personal account in nature. That's great. Next. Okay, I am now considering another inputs in this case. Prepaid insurance. There is a prepaid insurance. And that's again becomes a personal account reason if I add or I put a prefix suffix outstanding prepaid advance, it's personal, it is due to, it is recoverable from a particular person. Fun declare. Got the concept of income, expense, and then adding the word, four words makes it personal account. Absolutely clear. Next stage. Once you decide that it is income and expense, it is personal, or you add those four words, it becomes personal. Now, next, I'm going to make some strong statements. All liabilities are generally personal account. Do you agree with the statement? All liabilities are generally personal account because liabilities will be due to somebody, and that somebody is going to be a personal account. So all liabilities become personal account. Now, at the end of the day, I am trying to, give you a hybrid quality kind of a model based on the insights on the modern and the traditional technique put together. What is now coming to my mind? My mind is now telling me, if there is income, nominal; if there is expense, nominal; if there are liabilities, personal. You add the prefix or suffix, that is outstanding, accrued, advance, prepaid, personal. Life simple. The only thing left over is assets. Let's make more statements. Can I say generally all non-current assets will be real? I said non-current. I did not say all assets. I did not say current assets. I'm thinking generally all non-current assets is going to be personal account in nature. Agreed. And that also makes complete sense. Think about non-current assets: machine, furniture, building, goodwill, patents, copyrights, investments. They're all supposed to be what? Real. You can either see them if they're tangible, or you can feel them if they're intangible in nature. So that makes it real. So what do you need to keep in mind? Incomes are all nominal. Expense are all nominal. You add the four words to income expense, personal. All liabilities, personal. All non-current assets, real. Can I say it is only the current assets which might be real or it might be personal? For example, if I say inventory, what do you think? Real or personal? Then you need to start thinking, is it relating to a person? Then it is personal account. And if it is not relating to person, then it is real. Now, inventory does not relate to a person, so rightly said, real. Let's say, for example, I consider a trade receivable or a debtors, then in that particular case, is that relating to a person? Yes, it is relating to a customer who is a person, and therefore it becomes a personal account. For example, if I consider cash, then cash is not relating to person. It is something which you can see and touch, and therefore it becomes real in nature. I hope you got the dots connected. I know you must be knowing about real person nominal, but I'm just trying to streamline your thought processes in life. Because in a modern technique, we identified four things. We identified four things that it is asset, liability, income, and expense. Now let's put some rapid fire questions. We'll document this as well. So in step number two, you need to identify the nature of the accounts. It is either nominal, real, personal. Now I'm going to give you some triggering points. You need to vouch me true and false. T for a true, F for false. You can put it like that. Number one, all incomes are nominal account. Agreed. That's right. All incomes are always nominal in nature. Brilliant. Number two, all expenses are always nominal account. Agreed. Super. Next, number three, all liabilities are personal account. All liabilities are personal account in nature. Superb. Next, number four, can I say if I add or the prefix or suffix to any income and expense, outstanding, accrued, advance, prepaid, it becomes what account? I add the prefix or the suffix, it becomes a personal account in nature. Super. Next, all non-current assets are what nature? That's right. They are supposed to be real account in nature. You can see them, you can feel them, tangible, intangible. Super. And finally, can I say the only thing I need to apply mind is the current assets? Can I say current assets could be personal or real? You need to evaluate. Correct. Life simple. Wow. We've learned the art of the step number two as well. You want me to first take a test or you want me to first document the notes? Sir, please document the notes. Then you can take a test as well. Okay, done. I'm going to first document the inputs to you. Let me reshare the board. So as we said, you need to identify the nature of the account. So if I want to identify the nature of the accounts, I'm going to give you some basic fundamental principles. How many fingers do you get in your hands? Exceptions are there like Hrithik Roshan, but generally, how many fingers? Five. So five rules for the step number two. So you keep those five things and you get the inputs in this case. So let's give you some important five notes on the step number two. The first one is all. The word is very clear, all. So we can say all incomes and expenses. All incomes and expenses, we can say, are nominal account. So the moment you hear any income and expense, it is always a nominal account. Undoubtedly, you need to keep this in mind. Okay, I think getting a question from Prakash. So can you explain a little bit about the prefix and the suffix? Okay. Let's consider that there is a salary outstanding. Would that be due to a particular employee or maybe a certain group of employees? Is that correct? If you're looking at a salary which is outstanding, would that be due to a particular person or maybe a group of people? Correct. And if it is relating to a person, that means a single person or group of person, does that make it personal account? Is that correct? Did you get my point? I'm looking at salary which is outstanding. So you need to pay that money to a particular person. You didn't say a yes or no. What do you say? Am I thinking correct? That the salary is due to a particular person or maybe a group of people? I didn't get any inputs from your side. Okay, finally got the inputs. So when you say it is advance insurance, you paid that to a particular company, artificial legal person. Similarly, if you say there is income accrued, it is yet to be received from a particular company or a particular person. So when you use the word accrued income, it is yet to be received from somebody who might be natural or artificial human being. When you say it is advance, it is paid to a natural or artificial legal person. So the moment you say it is accrued, it is outstanding, it will always be recoverable or payable to a particular person, legal or natural human being. Got my point? Okay, that's great. So the rule number one, the note number one, all incomes and expenses a nominal account. Let's go to the second one now. Let's go to the second one after the nominal account. And the second one in this particular case is, so we are saying that if we use prefix or suffix, you put it in front of the income and expense or you put it at the back of the income and expense. So if we use the prefix and suffix, and the prefix and suffix is in front of, in front of any income and expense. I'm putting as INE, any income and expense. So what prefix and suffix are you going to use? Any of the four letters. So either I use the word advance, or I use the word outstanding, or I use the word prepaid, or I use the word accrued. So any of these four words, you can undoubtedly say it is a personal account. So if I use these prefix and suffix, we can say it is personal account. That becomes my second important note. Okay, then we go to the number three, the third one. Now, in this case, when you look at the third one, the third input in this case is generally. I'm being safe by putting the word generally. All liabilities, putting it as current and non-current. C means current, NC means non-current. So generally, all liabilities, current or non-current, they're supposed to be personal account. They're going to be personal account in nature. Next, number four. When you look at generally, there could be exceptions, but we'll not get into exceptions at any stage. Generally, all non-current assets, NCA, generally all non-current assets are going to be real account in nature. And that is irrespective whether they are tangible or whether they are intangible. So whether they are tangible in nature or they are intangible in nature, they will be all non-current assets. And number five. The number five is, in this particular case, we said that current assets depends. That is the only thing which is needs to be evaluated. Current asset depends. You need to identify they might be personal if they relate to a person, or they may be real account, but of course never nominal accounts in nature. So balance sheet contains only personal and real accounts because balance sheet contains assets and liability. Profit and loss account would always contain nominal account because they consider only incomes and expense. So in a balance sheet, all reals and personal accounts appear, and in a profit and loss account, only you can say income and expense accounts appear. I guess I made my 5 bullet points notes on the step number 2. I hope I'm pretty clear on my step number 2. So would provisions also be a personal account provision for a depreciation? Well, when you are creating a provision against an asset, then generally we call them that it's more like a liability, but they're not liability as such. I know why you're asking that question. When you consider a provision against an asset, the general belief is that people think that provisions are liability, but provisions against assets are not liability. So, to that extent, you can say it would pick up the nature of the asset account itself. So, I would rather call them as the real account itself. Yes, if you're creating a provision for a liability, then I would say it's a liability, then I would say it is a personal account. But provisions against assets, as you said, provision for depreciation would be a real account. It's a reduction of the same asset itself. So it should pick up the nature from there. Okay, got another question. So how the changes in inventory in the P&L is classified? Well, the changes in inventory is not supposed to be considered as a change in asset. When you consider purchase and you consider the change in inventory, you're basically converting the data in terms of cost of goods sold. And when you're converting it in terms of cost of goods sold, the net impact is expense. And therefore, you cannot look at the change in inventory on a standalone basis. You need to consider that you're going to take purchases, you're also going to take the change in inventory. Collectively, it becomes a cost of goods sold, it's an expense. Profit and loss account would never ever capture any personal accounts or any real accounts. They cannot enter the P&L. So if you ask me any item in the P&L, I would undoubtedly say that it is supposed to be a nominal account in nature. Okay, then I'm getting, so for tax should be a liability. I didn't get that. Personal, the question is to be cleared, I think, sure. Somebody said provision for tax. Isn't that payable to government? Isn't the government an artificial legal person? It becomes a personal account to that extent. You see, if you're looking at a liability, it will always be due to a some person. That person could be natural person, that person could be artificial legal person. That would not make a difference. So provision for tax should be tagged as a liability. Yes, of course. So it is a personal account in nature. Yes, of course. Because when you say there is a tax payable, or even if you say it's a provision for tax, it is payable to government. Government will be considered as an artificial legal person, so therefore personal account in nature. Correct? So remember the golden rules which I gave you. These are 5 golden rules created my side. When you say liability, liabilities are due to a particular person, personal account invariably. When you say it is income and expense, invariably nominal accounts. Non-current assets, invariably they will be real accounts. The only thing is the current assets where you just need to apply thoughts whether it relates to a person or not. Life simple. So can you repeat the second point? Okay, let's come back to the second point as well. In the second point, I gave you, okay, I think let's put that once again. I think maybe I'm making you think the way you've never thought earlier. That's fine. Tell me one thing. When you say, for example, there is a salary, you say it's an expense. Understandable. But when you say it is an outstanding salary, may I ask the question, it is payable to whom? Some employee? Is that employee a person? Or maybe collectively a group of employees? Can I say personal account? Okay, let's consider that there is an advance insurance premium. Is that advance premium paid to an insurance company? Yes. Is that an artificial legal person? Yes, and therefore it becomes a personal account. Let's consider there is a income which is accrued. Are you supposed to receive that income from some individual or from some company which becomes either a natural person or artificial legal person? So when you say that it is advance paid, it is accrued, it is outstanding, it is a dealing with a person, natural or artificial legal person, as the case may be. So anytime you add the word, and let me also tell you another thought process as well. When you add these four words, it no longer remains a P&L item, it becomes a balance sheet item. In the previous session, we talked about accrued, outstanding, advance, prepaid, and we said they are all balance sheet items, assets and liability. And assets and liabilities can never be, nominal accounts in nature. The moment it becomes asset liability, it is either going to be personal or it's going to be real. But in terms of making advance payment of expense or getting advance income from somebody, it cannot never be a real account because you received it from somebody. You need to pay it to somebody. So that somebody could be a person, either natural or artificial. So it's always going to be a personal account. I hope my thoughts are very clear out here. So could you repeat the fifth point as well? Okay, in the fifth point, when you're looking at current assets, in the current assets, let's look at two examples. Inventory. Is the inventory relating to a person? No. It is something which you can see, but it does not relate to a person. So therefore it becomes real. But for example, if you're looking at a trade receivable, can I say that is a debtor? So debtor means it is a person. You made a sale to a company, artificial legal person. You made a sale to an individual, natural human person. So account receivable becomes personal. So there could be blend of items in the current assets. You'll have to filter out and evaluate, whether it is current or it is, sorry, is real or personal in nature. So you cannot generalize for a current assets. You'll have to filter out its real or its personal. But invariably, you can see all liabilities will be due to a particular person, so personal account. Non-current assets cannot generally relate to person. They will all be real in nature, but current assets need to be filtered. Right? Am I clear on the thoughts? Great. Testing time. Okay, so testing time now. I have given you the step number one, identify the two accounts. Step number two, you need to see real, personal, nominal. So let's do one thing. Let's give you 10 things. Don't give me the answer on the chat box. Don't give me the answers on the chat box. Keep your answers with you. One for a correct answer, zero for a wrong answer. No negative works. So before I come to the step number three, testing time. Once I give you the answers, then you can get your scores on a scale of 10. So let's first take a test on the step number two itself. I'm going to give you 10 items. Please do not give any answers on the chat box. You need to decide independently. I'll give you 10 items and then I'll expose you to the step number five as well. Step number three. So let's give you a total of 10 items, one for each. Outstanding salary, furniture, investments. Maybe it is current or non-current, whatever. Cash, prepaid insurance, prepaid insurance. Next, inventory, rent, rent accrued, equity. Let's add some new elements to you. Loan, current or non-current, whatever. I think it'll take you maximum 2 minutes to decide. Don't give me the answers in the chat box. Take your call and give me the results. So let me know once you're done. I'll share the answers to you. Very good. Quite quickly done. Wonderful. Right, I think most of you have done. That's great. So then I think start giving the answers because it's hardly, I think, around, you know, 15, 20 seconds. You can answer that. Good. Let's begin the journey. Then you can give me your scores later. Let's give you the answer. When I use the word outstanding, it becomes personal account. Furniture is a non-current asset, real. Investments, current or non-current, it is something which is real. You can't see it. It's more like intangible in nature. Cash is a current asset, but it does not relate to a person. When you use the word prepaid, it becomes personal in nature. Inventory is a current asset, but it not relates to a person, but you can see, touch. Rent is an expense, nominal in nature. I use the word accrued, it becomes personal in nature. Equity is from the owner, owner is a person, so personal account. Loan, current or non-current, in this particular case, taken from a person, liability, liabilities are always personal in nature. I think let's get your scores on a scale of 10. So we got 9, 10, 9, 10, 9, 10. The score is revolving around 9, 10, 9, 10. Wonderful. I think equity might have been one figure, where people might have gone wrong, I guess. So I think that might have been, a little dicey kind of a situation. But I think more or less everybody's got a score of 9 or 10. I think some people went wrong, yes, I think on equity, because I did not discuss that. I thought let's put a surprise element. Super. So I think we are absolutely comfortable in terms of my step number 2. Now we're going to go to the step number 3. So step number 1 was exactly same like the modern technique. Step number 2, we've just made some few changes. Instead of identifying asset liability, though in the background we are still doing that, we are identifying the asset liability income and expense because that is indirectly deciding the fate of the real personal or the nominal account. Now let's come to the step number 3. The person who gave the traditional technique gave us something which is called golden rules of accounts. He said in terms of real personal and nominal account, he gave what he also called as golden rules of accounting. And the word is again rules, which means you need to apply them as it is, no deviations. So he gave us the golden rules for each and every category. Now, whether it is a personal account, or it is a real account, or it is a nominal account, he gave us some golden rules. For the personal account, it said debit the receiver. The rule is debit the receiver. And the rule is credit the giver. So we need to see in a given situation that the person is a receiver or a giver. If he receives, debit him. If he gives, credit him. Then he said for the real account, we're going to consider debit what comes in. Debit what comes in. So what comes in the business is going to be given a debit, and credit what goes out. Something comes into the business, you need to debit. And something goes out of the business, you need to credit. Cash came in, debit. Cash went out, credit. Furniture purchased, it came into the business, debit. Furniture sold, it goes out of the business credit. So debit what comes in and credit what goes out. And for the nominal account, we said debit all expenses and credit all incomes. And this, I think, works exactly on the other technique as well. We were saying debit all expense, credit all income. So the nominal account traditional modern technique is same, slight change on the personal and the real account. Now you need to think that if it is a personal account, the golden rule is debit the receiver, credit the giver. Don't worry, we'll take examples to apply the application. And then you look at a real account, debit what comes in, credit what goes out. What comes is a debit, what goes out is a credit. And nominal account is simple, expenses all debit, incomes all credit. So that gives me my three-step model based on the traditional technique of accounting. I think we're now going to take some transactions based on our experiences in the modern technique, and we're going to apply the three-step model. In the step number one, you got to identify the two accounts the way you did earlier. Then in the step number two, you're going to filter that is it real person nominal. And then I'm going to apply in step three the golden rules and get the results. Let's, I think, begin the journey. I am now going to share few examples, selected examples with you based on what we've done earlier, but we're just going to now apply the modern traditional technique. Let's begin. So we will go step by step. Do not hurry because that can create troubles for those who are learning for the first time, step by step, so we get the fundas absolutely clear. Because trust me, getting the entries correct is a big foundation in terms of higher accounting. I always tell people that when you're stuck up in terms of things at higher level of accounting, you should start thinking of visualizing the accounting entries as well. So let's take the transaction that there is a credit sales. Tell me which two accounts will be impacted because of the credit sale. When I say that there is a credit sale, so which two accounts are impacted because of the credit sale? One, of course, is sales. Oh, somebody said liability, creditor. When you make a sale, you create a debtor, that is asset. So this is sales, and you can say account receivable or debtors, whatever you call it. Sale is what account? Sale is supposed to be income, and income is supposed to be a nominal account. Account receivable is what? It's a current asset, and therefore it relates to a person, so it is a personal account. And now, friends, please hear my advice. Golden advice is what I'm going to give you. Many people get trouble in terms of applying the principles, the golden rules of personal accounts. So don't apply the personal account. 99% entries, there is either a real or a nominal account in the entry. Trust me, 99%. 99% there is a real or there is supposed to be, you can say, a nominal account. So pick up the real and the nominal account. So by the way, can I say sales is an income? So that is going to be credit. So account receivable by default is going to be debit. So you can pick up the easier account. So as far as income is concerned, that is given a credit. So if sales gets a credit, account receivable by default gets a debit. But otherwise, let's also understand the logic. You know, when you sold the goods to the customer, is he the receiver of goods or is he the giver of goods? He's the receiver of goods. When you sold goods, you gave him the goods. And therefore, he is the receiver, and therefore, account receivable gets a debit. If you want to think it completely. Great. Let's take more transactions with you. Now, let's take another transaction. I'm going to take complicated transactions only. I'm not interested in taking simple transactions. Outstanding salary. Are you going to book the expense? Let's first think like that. If there is an outstanding salary, are you going to book the expense? It's a salary which is not yet paid. Are you going to book the salary? Yes. So one account, of course, is salary. And what is the other account which you're going to record? That's right. It is going to be salary outstanding account. Salary is an expense that becomes a nominal account, and outstanding salary becomes a personal account. You pick up the easier one. Salary being a nominal account, expenses are always given a debit, so salary gets a debit for sure. And therefore, the other account by default gets a credit. So outstanding salary gets a credit. Simple and straight. Okay, let's take a few more transactions. Then I think we are almost done with the concept of making journal entry. Of course, you can practice more, but I'm just taking selected transactions. Let's consider there is rent, that is income accrued. Are you going to book an income? Are you going to book an income if there is a rent which is not yet received? Yes. Accrual basis. So one account is, of course, a rent. And can you tell me what is the other account? If there is a rent accrued, we're going to book the rent accrued account. Great. Rent is supposed to be an expense, a nominal account, and accrued rent becomes a personal account. Just pick up the nominal account. The rent is an income, so credit all incomes. So rent in this case is going to get a credit, and therefore by default, the rent accrued is going to get a debit. Super. That's great. Let's take one more. Let's now consider that there is, let us say, advance insurance. I paid an advance insurance premium. Are you going to book an expense? If there is an advance insurance which is paid for the next year, I'm not going to book the expense. So one thing is very clear that I am undoubtedly going to pay cash. So one account is cash. What is the other account? If there is an advance insurance, that's right. You can call it as advance insurance or call it as a prepaid insurance, or whatever. Both the terms are absolutely correct. Prepaid insurance, advance insurance, that is personal, and the cash is real. You can take the cash as a base instead of taking a personal account. So cash is coming into the business or going out of the business. Cash is going out. So credit what goes out. So cash in this particular case is going to get a credit. And can I say the prepaid insurance gets a debit? Superb. You want me to take more transactions? No. Are we comfortable with this? So I think if you want, we are comfortable with this, then it's fine. So I want you now to give yourself a comfort zone scores on a scale of 10. Out of a scale of 10, what is your comfort zone on the art of making journal entries in life? So we're getting a good score of 10 out of 10. That's brilliant indeed. I think you polished your scores for those who knew accounting. So that's brilliant indeed. Super. The journal is done. Now we are going to learn the art of making leisure. Can you explain the third step again? Okay. Now, in the third step, you see, you just need to apply the golden rules. And the golden rules are, what I gave you: personal account, debit the receiver, credit the giver; nominal account, debit all expense, credit all incomes; real account, debit what comes in. Now, my trick is what I tell people, that when you look at an entry, 99% there will be one of the accounts which is real or nominal. I would say don't go for the personal account. Go for the real or the nominal account, because that's easy to think. So in the two accounts, pick up the one which is real, pick up the one which is nominal, because nominal, expense, debit, incomes, credit. Real account, what comes in gets a debit, what goes out gets a credit. And then you can take the other one by default as the other one. So don't take the personal account as a base to create the entry. It's better to begin with either a nominal or a real and get the picture. Let's give you a small question, I think, and you can try this, Kartika. Let's say if I give you a journal entry that there is a loan taken. What are the two accounts? Loan taken, cash, loan. Wonderful. Cash is what? Real. Loan is what? Personal. You got the real account right. Look at the cash. Is the cash coming in or the cash going out? When you took a loan, can I say cash is coming in? So debit what comes in. Give me the entry. Cash gets a debit, debit what comes in. Loan by default gets a credit. As simple as that. Got my point? So you have to start thinking that pick up the two accounts out of the two, go for nominal, go for a real account. Don't go for the personal account unless both the accounts in the entry are personal. The chances are rare. Okay, now I think I'm going to get on to the art of making a ledger to you. So you want me to teach you the concept of the ledger? You're welcome. Of course, I don't want to teach you the way a ledger is made. I want to teach you the art of making the ledger per se. So let's first understand what exactly is the concept of a ledger. So what I'll do, I'll take a few transactions and we'll understand the essence of a ledger. Let's, I think, first of all, understand what exactly a ledger is. Then we'll see, how ledger is made. My idea is not to teach you the clerical part of making the ledger. The idea is to expose you the concept of a ledger. Let's do one thing. Let's give you some sample entries. As I give you the entries, let's see if you can tell me, looking at the entry, what is the transaction? So far, we have been looking at a transaction and looking at an entry. I want to start looking the other way around. So let's say I give you the entry cash debit, sales credit. Would you like to tell me what entry does this transaction, does this represent? Because we've been looking at transactions, and that's right, this is cash sales made. Good. Let's say, let's give you the amount as well. Let's say this is 5 lakhs. Let's give you another entry. Let's say the entry is purchase gets a debit and the cash gets a credit. Purchase gets a debit and the cash gets a credit. So would you like to tell me, okay, before my asking everybody said it's a cash purchase, wonderful. So this is 3 lakh. Let's give you two more transactions. Let's say there is rent debit. Let's say there is rent debit and cash gets a credit. Would you like to define what is this entry? That's right, rent is paid in cash. Wonderful. So let's say this is 1 lakh. And then let's give you one more transaction. And let's say this is cash debit, interest credit, cash debit, interest credit. And let's say this is 2 lakh. And that's right, it becomes interest receipt. Wow. Now I'm going to ask you a very simple, stupid question, but I think that stupid question is good enough to understand the concept. I want you to look at all the entries where cash is given. Look at all the entries where cash is given and tell me what is the net cash considering all the four entries put together, the net debit or the net credit. You get the entries where the cash is given a debit, you get the credit, and see what is the net position of cash in these entries. I'm sure everybody can easily do that. So I'm getting 9 lakhs. No. You need to take debits separately. You need to take the credits separately, separate debits and credit. Let's go with the debit. Cash has got a 5 lakhs debit. Cash has got a 2 lakhs debit. So what is the total debit? 7 lakh. I'm just picking the debits first of all. In the first and the fourth entry, cash gets a debit of 5 and 2, that's 4. 7. Make great. Next, in the third entry, cash gets a credit of 3, and then cash gets a credit of 1. So the total credit is to the extent of 4 lakh. So what is the net amount of debit? The net debit is 3 lakh. Now, please hear me very carefully. I just want to give you the essence of what a ledger is, which many people know, but I think this is for those who are learning for the first time to get the fundamentals clear. You keep recording entries throughout the year. You keep recording entries throughout the year. And therefore, in some entry, cash gets a debit. In some entry, cash gets a credit. The idea is to get the net cash at the end. And that's what exactly a ledger would do. So when you keep recording entries in the cash, some entries gets a debit, some entry gets a credit. I would say sitting at the end of the period, I want to understand whether the cash has got a net debit or a net credit balance. And trust me, that's what exactly a ledger does. It is, when you remember the definition, accounting is the art of recording and classifying. Now I am going to classify all transactions at one place. All the entries related to cash will be taken together, and we will see what is the net debit or what is the net credit for each account. So let's say during the accounting process of making a journal entry, you opened up, let's say, 20 accounts. I'm going to make 20 ledgers. Get the net debit or credit of all those ledgers. But you don't need to do any double counting. So when I say no need to do a double counting, let's, I think, have a look out here. Look at these entries once again. Can you help me in counting the different ledgers in this case? Look at all the entries and count the different ledgers. Do not do any double counting. If the cash is appearing twice, thrice, don't take a double counting. Can I see? We can say cash is 1, sales is 2, purchase is 3, rent is 4, and the interest is 5. So I guess if you count the different number of accounts in this particular case, you'll easily reach the conclusion that there are 5 different accounts without repeat. And if you've got 5 different kinds of accounts, then in this particular case, we need to make 5 ledgers. So at the end of the day, I need what is the net balance in all these 5 ledgers. So let's do one thing. Now let's also give you the art of making the ledger. Having understood that there are 5 ledgers, let's, I think, still understand the art of making the ledger. So let's do one thing. Let's now give you the art of making a ledger as well. So this is, let's say, a ledger. A ledger is prepared in a T format. A ledger is prepared in a T format. So when you make a ledger, you need to make it in a T format. This is the debit side and this is the credit side. The left side is the debit and the right side is the credit. Now, I know many of you are very comfortable with the concept of ledgers, but many of you must be learning for the first time. So let's give you an input very carefully. Let's have a look. Look at the first entry carefully. Let's look at the first entry carefully. In the first entry, cash gets a debit. If in the entry cash is a debit, you need to put it on the debit side of the ledger. Look at the entry number 2. In the entry number 2, the cash is on the credit. If the cash is credit, you need to put it on the credit side of the ledger. So if the cash is debit in the entry, you need to put it on the debit side. If the cash is credit in the entry, you need to put it on the credit side. So debit means debit side, credit means credit side. So the first thing is very simple. When you are posting, we call it as the art of posting. When you're posting an entry in the ledger, the debit goes to the debit side, the credit goes to the credit side. Side remains the same. Now, in the first entry, cash is a debit, so you need to go and post it on the debit side, but you will write what is the remaining portion of the entry. The remaining portion of the entry says sales. So what we're going to do, we are going to write down sales on the debit side, that is 5 lakh. So in the first entry, cash was a debit, so you need to put it on the debit side. But you're going to write something which is the remaining part of the entry. Now let me also tell you, when you make a ledger, though we do not do this internationally, but you should know that generally when you post it to the ledger, we use the word to on the debit side and we use the word buy on the credit side. The art of posting the entry is that we use the word to on the debit side and we use the word buy on the credit side. Now one can even read entries out of the ledger. Like for example, if I want to read the debit side, I will say cash, debit, sales, credit. So when you read the debit side, the ledger is first given a debit, cash, debit, sales, credit. Did you get the point? That how you need to put the entries in the ledger. The entry says a debit, you put it on the debit side. But what do you write? You write the remaining part. Clear? So when you put in the entry says debit, so you need to put it on the debit side, but write down the remaining portion like sales. Let's try this, the next one. So let's put the question to you on the second entry. Tell me which side are you going to record the second entry in cash? The entry is purchase debit and a cash gets a credit. So you're going to put this on which side? Credit side. What will you write on the credit side? When you're going to write on the credit side, what are you going to write on the credit side? That's right, purchase will be written, and that is 3 lakhs. Wonderful indeed. So we're going to write down the word purchase, and we're going to write down the amount, that is 3 lakhs. As simple as that. Let's try the other two entries as well. The third entry, you're going to put on the debit side or the credit side of cash. The entry is rent, debit, cash, credit. On the credit side, we again write down rent. So we'll write down rent, that is 1 lakh. And when you look at the other one, so you put it on which side? Of course, debit side, and the word is interest, and that is 2 lakhs. Now you can see the same thing which we did manually is exactly what we're doing out here. We're organizing the items in the ledger and it is going to classify everything at one place. Now, if you take the total of the debit side, the total of the debit side is 7 lakh and the total on the credit side is 4 lakh, but we take the total whichever is greater. We take the total whichever is greater, the debits or credits whichever is greater. Now, there is a balancing figure which is appearing on this side. And the balancing figure is represented by what we call a balance carried down. It's called balance CD. It's called a balance CD, that is a balance carried down. This balance carried down in the next year. So this is the ledger, let's say for the first year, this balance carried down is going to be transferred in the next year as an opening balance. The closing balance of this is going to become the opening balance in the next year. It is called a balance BD, that is brought down. So we say CD because it is going to be carried down, and it is called BD because it is brought down. Now, one thing which people tend to get confused, which I think I should definitely clarify at this stage. Is this 3 lakhs a net debit or a net credit balance? Remember, your debit side of the ledger is more than the credit side of the ledger. If the debit side of the ledger was more than the credit side of the ledger, you can say it is a net debit balance. You can say it is a net debit balance, though it appears on the credit side. Though it appears on the credit side, but when your balancing figure comes on the credit side, it means debits are more than credits. It's a net debit balance. If your balance comes on the debit side, that means the credits are more than debits, and therefore it'll be called a net credit balance. Am I clear with the basic input of making a ledger? and also the logic in terms of making a ledger, that you're classifying everything at a single place and you want to get the net position of a ledger. Let's, I think, now look at the other ledgers which we have created. Maybe we can try one more, but otherwise I think we can directly get it. Let's I think try it directly. Now, if I tell you, if I make a sales ledger, there is only one entry in the sales ledger. So would you like to tell me, if there is only one entry in the sales ledger, then where will it go? I think somebody has put some tick. Oh, can you please clear that for others? Praveen, can you please erase that? I know must have happened by mistake. It must be looking messy to everybody. Can you please clear that, Praveen? I think your pen mouse went here and there. Okay, that's wonderful. Please clear that. Thanks. Great. Okay, so in this particular case, when you look at the sales, just tell me quickly, is the sales going to get a credit or debit? You're going to put it on the credit side of the ledger. The credits will be more than the debits. So this account will have a 5 lakh credit balance or a 5 lakh debit balance. Correct. Because this ledger will go on the credit side, the credits will be more. Okay, so let's put the amount. Purchase is going to get what? 3 lakhs debit credit. Purchase is going to get what? 3 lakhs debit or credit. That's right, it's going to get a debit balance. Wonderful. And further, when you are looking in terms of, let's say, a rent, can I say this is going to be what? 1 lakh debit. And when you're looking at interest, can I say this is going to be 2 lakhs credit? And I want to show you something very interesting at this stage. What's this? This is something interesting to watch. What was the balance in the cash? It was 3 lakhs debit. Now, friends, I want you to see something most important, which will help me to take the things further. Cash is 3 lakhs debit. Add all the debits. The purchase is 3 lakhs debit, makes it what? 3 plus 3, 6. And the rent is 1 lakh debit, makes it what? Just add all the debits. Cash is 3, purchase is 3, rent is 1. What is the total debits of these three ledger? 7. Let's look at now on the credit side. Can I say the sales is 5 lakh credit and the interest is 2 lakhs credit? The total credit is 7. The debits and credits are matching. The debits and credits are matching. Is it matching by chance or is it got to be? In all the entries, the debits of different ledgers put together and the credits of different ledgers put together is equal by chance or got to be? I didn't get a single answer on that. It is, of course, got to be, because when you started the entries, one was given a debit, the other is given a credit. So at the end of it, the debits and credits undoubtedly is going to match. Yes, double entry bookkeeping in life. Did you get the art of making a ledger? Am I clear on the concept of making a ledger at this stage? Journals done, ledgers done. Now the exercise is to give you a trial balance, and that becomes the basis of making financial statements. Okay, now in this particular case, I need some time now to make financial statements. By the way, I just wanted to check, is it possible that we take a session on Monday and Tuesday instead of Tuesday, Thursday in the next week? Would there be a challenge if I take a class and request the team that if we can take a class on Monday and Tuesday? Would that be perfectly fine? Okay, I guess nobody's got a challenge on that. Okay, then I think perhaps I'm going to request the team for that. And I think probably by Tuesday, we should finish with the basics as well, because Monday, I'm going to spend time in terms of giving you the art of making the financial statements. A little unstructured, but we're going to learn the art of making the financial statements. And then I'm going to give you some more inputs on Tuesday regarding some basics like the concept of provisions, contingent liabilities, etc. Give it a little finer tuning. The basics will get done at that stage. Okay, so right now I don't think so. I am taking the journey forward because I think I'm run short of time in terms of making financials. The Excel sheet will be updated, right? Which Excel sheet? Okay, you mean to say the class timing sheet? Is that? Okay, yeah, yeah. In any case, yes. I think I'll request for that. I think it'll get updated. Of course, the links will get updated on that. So sorry, sir, when is the next class? I lost connection. I'm just requesting that, if we can have the class on Monday, Tuesday next instead of Tuesday and Thursday. So it's not confirmed. I'm just going to request the team that if we can get the session on Monday, Tuesday, same time at 7 in the morning. So I think that would work. Right, friends. So I think that's all for the day. I think I'm leaving a little early again. Monday, we'll meet. We'll just request the team if you can have it on Monday. So thank you very much for joining. And is Becker's book touching upon this? No, not really. Becker book is going to touch more upon the CPA curriculum. This is just the basics. Right, friends. So thank you very much. I'm going to see you in the next class. Thank you. Bye-bye. Enjoy your day. Thank you. Thank you, all of you. Bye-bye.